We're going to talk about gold, of course. We're going to talk about euro dollar, the pound, try to do some sort of a recap into the market of what happened over the weekend, over the week, sorry. And, have a look into the Fed, why they kept the rates unchanged, and why did that market skyrocket into the DXY. We had gold dropping over $50 in less than 15 hours. So that was a big drop. Well, besides gold have been dropping already more than $100 in the last few hours, it dropped 50. Okay, so shall we long it? Because it's a good price at the moment, below the 3,300 level. So should we look for long opportunities? Or should we continue to short gold and sort of go ahead with the momentum trade? Last but not least, euro dollar. We had the euro dollar. Well, not only euro dollar, but we had euro dollar. We had the pound dollar. We had the US dollar, Japanese yen. We had the Aussie CAD. All of them hit the TP, and that gave us over 240 pips in total. So euro dollar specifically was over 60 pips. So that was pretty good. Them just accept those people coming into the webinar. Cool. So as always, let me have a look if there is anyone new today. I do see one new name, I think. Have a look. June. I think June is new. So welcome, June. Feel free to ask me questions. If you have any questions, you're more than welcome to send them on the chat. If you don't have questions, that's completely fine as well. Sometimes I don't even know how to answer those questions because I'm not the guy that knows everything. I'm always learning with everyone. So if you guys have a question, please send it over in the chat and we can have a chat about in the comments and we can have a chat about that. Oh, there you go. Okay, so a few things first, all right? Let's just go and do a recap of the trades we had from yesterday webinar. So the first one, and I guess the most traded asset, is euro dollar. So we had euro dollar coming at the price starting, the entry price was at 1.1563. Stop losses were above 1.15900 and the take profit was at 1.15. So that gave us around 62 pips and a risk reward to 2 to 1 pretty much. So 28 pips was into stop loss and 62 pips were in take profit. So let's say if you've put $100 into your stop loss as your risk, you would have got back $218. Okay, well, around $200, as we had some. I think the position was not a day trading. Oh well, it were, but yeah. So you would be getting the full $218. So that was quite good trade. And if you hold that trade, you would have had much more, maybe like if you would have held those trade to 1.14, you would do pretty much double of that. So if you put $100 into your stop loss, you would have got $560 back into the take profit. Okay. Cool. Did anybody catch this trade? No one? Interesting. So the next one, we have a message. Let me check. Yes, Barry took it. Okay, that's good, Barry. Congratulations. So 62 pips onto your account. That's good. Now, the next trade we had was US dollar, Japanese yen. I also take profit. This one is a little bit of a bigger trade. So stop losses were 33 pips and take profit was 119 pips. So if you put $100, you would have got back $254, $350, $300 around that. And that took 6 hours and 30 minutes. So we didn't have to pay any commissions on, any swap fees into that. So that's pretty good. And it was like a very minimal drawdown in a sense, because look at that, literally very, very tiny bit of drawdown. Cool, that's good. So 1,119. So let me just put it that 1,100. So that's 120 pips plus 62 pips. That gives us already 180 pips. Then we had the Aussie CAD trade. That was a short Aussie CAD. So that was a day trade as well. So we enter it at market price. And then we had the target at 89. So that gave us 65 pips take profit plus 65. That is already 247 pips in total. Now, the pound dollar, I remember I've mentioned to everybody that there wasn't a good spot to enter the market. I remember that the market was trading around these levels. And I say, look, if there is a possibility for the market to come back around these levels, then I would be looking to short. But I didn't end up getting that position. So that was a good position if you got it. Also gold. Let me get another chart. This one. That's much. This one. Perfect. So we had the target at 3,300, around 3,300. And I've mentioned that because of this box. Yesterday, the market was trading around the levels of $3,330. Okay, around here. When we had the webinar. So it was right here. So it was right here. And I've mentioned, look, if there is a possibility the market can come back at this stage and drop to 3,300. Okay. And that was exactly what happened. So that was more than $40. Well, it was a $30 drop to the target, but it was more than $45 down. Okay. So if we go from the top to the bottom, that's around $50. Okay, that's around $50. Very, very close to $100 actually. If it dropped down to here, it would be $100. It wasn't that much. So it was a 2% decline in a few hours, I would say. Awesome. Okay, that's done. So US dollar, Japanese yen, GBP USD, Aussie CAD, and Euro dollar. So that's good. All of those trades gave us pretty massive profits. Now, let's talk about the Fed and what happened with the Fed and in keeping the rates unchanged. Okay, so if we have a look into FinLogic's economic calendar, we can clearly see today over here that the Fed has maintained the rates as previously. Okay, so that means there is no changes. Okay, so actually, have a look into US dollar index. I've mentioned about reaching the target of 100 into the coming months, but it ended up, reaching the target into a couple hours after I say that. So that was pretty interesting. So coming back to the Fed, so the US dollar is strengthening abroad. Okay, so that there was US dollar strength every single way, like against euro, against the pound, against gold, against Japanese yen, against the Canadian dollar, against the CHF. That was absolutely strong move. Okay, so when something like that, with something like that magnitude happened, it wasn't just because the Fed stopped the interest rates. There has to be something else, right? So remember yesterday I've mentioned to everybody that we would have the CME changing very quickly today. because of the interest rates decision? Well, that's exactly what happened. Look at that. Does anybody remember how it was yesterday? I do. I want to see if you guys remember. So from yesterday to today, well, not yesterday, yeah, yesterday to today, we had a change of around 30%, okay, in total. So if you stop and think for a week, if you stop and think for a second, from 56.8 all the way now, the market was trading at around 68, 70% chance of a cut. Now it's nearly 50-50. Okay. If this guy here gets a little bit more, like if this guy jumps to here to jumps 6% to here, then we won't have a change. So we will be 50-50. Okay. But at the moment, the market is expecting no changes into September. And that was the month that the market was expecting a cut of 25 basis points. So that's one of the reasons, one of them, of why we had such a big move into US dollar. Okay. So when we have October, for instance, we got the current target at 425, 450, and then we have 4 to 425 for expectation. So another 25 base points cut is expected on October, but not in September. So what I've mentioned about a few months ago, and most likely you guys will remember that, is that September cut would go to October, and then once the September cut is being not done, so it's being paused again, and Jerome Powell have a hawkish speech, we're going to have the October moving to December. Okay, so that's exactly what I think it can possibly happen into the coming months. We won't have much cuts happening by the end of the year. And I'm going to tell you why. So if we go to the FMC website, just type Fed. Yeah, the inflation is still pretty high, 2.3%. It's above the target range, especially the PC. Unemployment rate still quite high at 4.1%. 2020 was at 15%. The GDP, it's okay at 3%, but should be a little bit more. Anyways, I think in general, Fed is doing quite a good work to not blowing up the whole America. But if we go to the Fed website and then come into monetary policy, go into meeting calendar and information, you will get to this page. And what's most important for me here is the statement and then, of course, the minutes. But the minutes will be released afterwards. Okay. So it's always into the next month. So the July minutes will be released into August, most likely. So we have to go and read that into August. But anyways, so if we come and have a look into the HTML version, I'm gonna send the link into the chat. So you guys, if you wish to, Fed statement, you can follow up with me into the website, into the Fed website. Cool. So he starts saying that the swings in net export continue to affect the data, and that the recent indicators that are suggesting that growth of economic activity moderated in the first half of the year. So moderated, it doesn't mean that it's good. It just sort of stagnated in a sense. Okay. The unemployment rate remains low. So in a sense, yeah, when we look back for, let's say, 2020, for instance, as I've mentioned before, the unemployment is low because you have like a huge gap, a huge move up to close to 15%, and then a down below 5, sitting where we at now at 4.1%. So when we look at that on this level, that's okay. That's a good, interesting scenario. Okay. Labor market conditions is solid and the inflation remains somewhat elevated. I completely agree. Not that hugely elevated, but it's somewhere about above the target that they need to continue to maintain the interest rates high enough for the inflation to go below the target or in the target, actually, not below. Below would be pretty hard, but maintain the interest rates high enough so the inflation target so the inflation can come back to target and then they can do another cut. So the second paragraph says that the committee seeks to achieve maximum employment and inflation to the rate of 2% over the longer run, as always, and that the uncertainty about the economic outlook remains elevated. So that basically is the Fed saying we really don't know what can happen. And that is somewhat of a not so good rhetoric, okay? But I guess the market somewhat expected that to be into the statement, and it didn't price in that because, being honest with everyone, it is very, uncertainty of what can possibly happen at the moment. We never know. Now, moving on, the committee is attentive to the risks to both sides of its dual mandate. And then in support of it goes, the committee decided to maintain the target range the committee decided to maintain the target range for the federal funds rate at 4.5 to 4 quarters to 4.5%. In considering the extent and timing of additional adjustments to the target range for the federal funds rate, the committee will carefully assess the incoming data, involving outlook, and the balance of risks. The committee will continue reducing its holding treasuries and securities and agency debt and agency mortgage-backed securities. So didn't change much from previously. The committee is strongly committed to support maximum employment and returning inflation to its 2% objective. They've always been. I think that's the whole primary goal. And in assessing the appropriate instance of monetary policy, the committee will continue to monitor the implications of incoming information for the economic outlook. Committee is prepared to adjust the instance of monetary policy as appropriate if risks emerge that could impede the attainment of the committee goals. That is, maintain the dual mandate. That is basically maximum employment and the inflation rate of the inflation at the 2% rate. The committee assessment will take into account a wide range of information, including readings on the labor market conditions, inflation pressures, and inflation expectations, and also financial and international developments. So when we look back, it didn't change much from the previous release. And the reason is because it didn't change much into the economy. Okay. When we look at the inflation hasn't moved a tick. When we look to unemployment has rose. When we look to uncertainty continues to be one of the primary drivers. So there's literally nowhere to go besides maintaining the rates unchanged until that whole thing changes. Okay. Does it make sense? Because there's literally no sense of you doing something that will be really bad into the coming months. Okay. Now, a few things that Jerome Powell mentioned about is the tariffs. Okay, and that the tariffs can potentially bring a lot of the potential bring a lot of inflationary pressures into the economy. Okay, remembering that tomorrow is 1st of August, and therefore it's when the inflation will start. And for that reason, in the coming months will be really, really crucial. Okay, Trump has done a few deals with a few people around. I think it was Europe and then also Japan, and a few others. But that's just a minority, because when you stop and think about, he did with 4 countries. He needs to do another 148 countries now. Will he do it? Because I don't think he will. It's nearly end of the year and he only did 4 countries this year. Because the reason is he keeps, prorogating the start of the tariffs, like from, I think it was from May to June to July to August. Was it going to be October, December, November now, September? We don't know, because that's the whole point of the market. A lot of uncertainty happening around that at the moment. So that being said, what the market priced in with the statement and what the market pricing with the press conference is a higher for longer approach. Okay. If we look at the dot plot chart, we can see that majority of the central banks are expecting the rate to finish at 4%. 375, between 375 and 4%. I would say 3.8 to 3.9%. So going to 4%. And we are at 425 to 450. So if there is another cut, it won't be now, it won't be later, it will be in December. Okay. That's really what I'm expecting, because the dot plots don't lie. And if the central bank is saying, the majority of them are expecting the rates to finish the year between 4%, and we are already into, let me just put into current, and we are already into 425 to 450. It's a 25 base points cut that needs to be done to bring the current rate at 4. So really, really don't think that any of what would happen will change the Fed's mind to just cut that. Okay. Another thing is that if we look at the 10th of December, there's a higher probability of the market just maintaining the same. Okay, so I really don't believe that they're gonna cut. Well, maximum 125 base points cut. That's what I really honestly believe. A 25 base points cut by year end. Okay, and nothing else. Really, nothing else. Cool. That being said, moving on. Gold dropped $50. Should we long it? Okay. Do you guys, sorry, just before moving on, do you guys have any questions about the Fed keeping the rates unchanged? That I could answer that? I'm going to give it a minute. I'm going to give it a second so you can type on the comments if you have. No one? No questions about the Fed? So just we can move on and don't need to come back on that question again. Oh, we got 2 questions. One from, wow, 3 questions now. Okay, let's have a look in that. Let me see. So the first one is from Switz. He said, I wasn't listening attentively, my bad. So was the Fed's tone hawkish? Yes, the Fed's tone is basically maintaining a higher rates for longer than what before expected. What that means is, if before was expected for the Fed to maintain the rates at around 5% for the next 1 month, now is expected for the next 3 months. So that was just an example, but in reality would be 4 to 4.25% still pretty high. So market is still waiting for that to continue. Okay. So say only for Japanese yen, why they didn't increase rate? Because the inflation, so for you to increase rate, you need a higher inflation. You need inflation to be high. You can't just increase rate because you think it's good. Because when you increase rate, you're actually changing the whole economic landscape. Okay. So if you just suddenly hike interest rates, things will become more expensive. Business will have to pay more for the employees, and then goes like that. So they didn't hike the rates because they didn't have inflation and they didn't have reasons to do that in the first sentence. And Derry says, how many cuts are you expecting before the year of the end? So I'm just reading before the end of the year. Okay. Before the end of the year, I'm expecting one, and that will probably be into December. Okay, I'm really confident on that. That will be in December because from what we had today and looking at the dot plots, most likely December will be the one that we will have a 25 base points cut. September is already priced in for no cuts, so we don't have a meeting in August. Okay. So we were only going to get September, October, November, and December. From those 4 months, we're only going to get 3 meetings. That's going to be in September, October, and December. So from those 3 meetings, the next 3 meetings of the Fed, that is September, October, and December, I'm expecting 125 base points cut in December. Okay. And that's basically it. I'm not expecting anything else from the Fed this year. First, because of the rate high, the rhetoric of a higher for longer, and second because inflation is still above target. And I think the strategy that they have is wait the inflation to come back to target, so then we can cut the 25 base points into the rates. So say, do we still have US dollar Japanese yen long trade idea? No. US dollar Japanese yen has whoever got it, got it. Whoever didn't got, they missed the opportunity. We're gonna have, afterwards other trades, but for now, this one is the only that it's already been take profit. So Anderi says, if DXY and very strong on monthly candle, can we expect the others month to build on that? It depends. It will depend, okay? It doesn't mean that 1 month closed is strong, the other one has to close as strong as well. It depends in a lot of factors. It depends on what the central bank will say, if there is any risk switch from risk on to risk off, or if there is capital flows in, capital flows out, or it's not like that. We did had a move on US dollar Japanese yen. What's happening there? Not too much, okay. Zodwa say, do you expect the NFP tomorrow report to be strong? When the topic of rate cuts was raised, he consistently emphasized the importance of monitoring job data given that. And based on current conditions, I don't believe a rate cut is likely this year. Wow, congratulations, Odud. That's a really good analysis. I agree with you, but I still expect 125 base points cut. Okay, just because of the dot plot says that the majority of the members are expecting to go below. So I still be living on at least one and a maximum 25 base points cut. So now, if I expect the NFP tomorrow to be stronger, no, I don't. Okay, because it's a bit of a tricky situation with the NFP, and I think with how the central bank is and how the whole business in a sense of around the world in general is, I don't believe NFP could get some traction there. No. Cool. So I think I've answered every question. So that's pretty good. So let's jump to the next topic. That is gold. Okay. Go for the 1 hour. So gold has been dropping since pretty much around July. So around. Oh wait a minute. Oh wow. Sorry. Oh, that's a 1 hour chart. Oh gosh. I want one daily. Okay, that's good. I was like, what? Did it drop that much? Because I thought it was on daily. So, in a sense, US dollar, gold has been dropping quite a few times and then recovering that back. When we jump for a bigger picture, when we jump to a bigger time frame, we can basically see that is on a target, on a range. And this range has been going on for quite a while. Okay, very, very interesting range, being honest with everyone, because when we have something that goes from 3,460 down to 3,260, that's a $200 move. So there is a big potential to be making some good trades in the middle of these moves. So I honestly expect gold from now on to be pretty big. So following the more technical side here, when we looked at it, it's just it's just consolidation. So most likely reaching that support where the market just breached yesterday, we could go above the 3,400 again, and then generates some interest into the sellers, and then sort of push around that level before it gets breakdown into either way. One of the biggest concerns about gold, in my opinion, is that the risk on and the risk off. That's going to change hips. Okay, it's going to change hips, because if the risk is on, market really don't want gold. It's just going to buy other assets like US dollar, for instance, Australian dollar, New Zealand dollar. So it's really not the case for gold. Okay. Where we are at the moment, we are on a risk. Oh, sorry. If the risk is off, gold would be the one that they would be buying. If the risk is on, that is exactly what is happening at the moment. People are going to look to buy gold. Look to buy US dollar, look to buy Australian dollar, look to buy New Zealand dollar, even sometimes euro and pound. But all of the other ones, like I would say not Japanese yen, because Japanese yen is not a safe haven anymore, but CHF, Canadian dollar, they're all being sold very, very hard. Okay, so with gold, it wouldn't be different. I think from now we may have a break below this structure that could drive a bit of a, like something similar to what happened over here, and then it back above to the range. Okay, so if I were to trade gold, I would be looking to fade any of those rallies and see if I could short based on the risk. But it's just frozen. Refresh that. Based on the risk on and risk off scenario. Okay, there you go. 1 hour. Perfect. Okay. All right. So I would be basically looking to fade. What I mean fade, just don't look at it, of these moves up to go to have continuation down. Okay. So that's pretty much what I'm looking into gold. Now, let's just see about a few of the other opportunities that are into this week, because today's Thursday. We still have a few trading hours today and tomorrow. So there was, as I say, we already catch 4 trades: Aussie CAD, US dollar, Japanese yen, euro dollar, and for those who did, could be gold or could be GBP USD. So it just depends on if you went ahead with those positions that I've presented yesterday or not. But mainly 3 positions on US dollar, Japanese yen long, euro dollar short, and Aussie CAD short as well. Okay, so I guess the best option now is for us to look for NFP. Okay, so we have NFP around the corner. So let me go over here, come back. There you go. So we have NFP right here. So Friday, 1st of August, and expected to be a tick up into the unemployment rate for July and a tick down into the non-farm payroll. Pretty interesting. Okay. So I believe that if the non-farm payroll comes below the 147, we'll be treated as somewhat of bad. Okay. And if the unemployment rate goes to 4.2, that's okay because the Fed has predicted that already. So it's market is sort of priced in a sense of 4.2, maybe between 4.1 to 4.2. It's what the Fed has been predicted in a sense already. So there's no big moves on that instance. Now the non-farm payroll, if that comes below 110,000, I would be looking to long the dollar. Yes, the opposite, because if the market have a labor market that is not that strong, the Fed may continue to hike, may continue to leave the rates unchanged, and therefore US dollar will be strong. Okay, so it's just playing the opposite of what usually happens. Cool. Okay. So with that, I think that euro dollar could be another potential good trade. So just bear in mind that euro dollar is quite extensive already down. So if we have a look into the chart, euro dollar is trading now at 1.15, around 1.14600. I guess that the most likely scenario here is a continuation down. When the market sort of pulls back up, we probably will see a continuation down to maybe 113. Okay, because we've reached at 114 and now going to 113, most likely. So actually we reached at 115 and then 114 and now 115. If that's the NFP comes higher. Okay. Now, US dollar Japanese yen. I see a few people asking about the US dollar Japanese yen. Oopsie. So if I could, as I say, as I've mentioned yesterday for everyone, if we had a break above the 149, 149 to 100, around that number, keep those positions open and manage the risk from there. Okay, so I don't think it's a time to enter the market anymore, but I don't think it's a time, if you are into the market, to leave the market, because your position is pretty damn good. Okay, like you're trading at 140, around 147, 800. So I really don't expect, otherwise, if you have a position around that, to have a better position than this one. Okay. So we'll just keep that position open and close that in 50% every time, 50%. As soon as it breaks another top, so closes. So as soon as it breaks this top here, I would close another 50%. And then it breaks another top, another 50%, until we don't have much more positions open, much more lot sizes open, and then we can just close the full size. Okay. After that, so euro dollar short, US dollar Japanese long. I think gold is a short as well. I'm targeting 3,300 on gold. Can you please give us Aussie CAD idea? Yeah, the Aussie CAD idea I've gave yesterday, and that's take profit already. So there's not much more to be done in here. The market is even coming back already. So there's not much that we could do. There was actually a quick idea, as I say, as a day trade, 89 cents target. So from there, from where the price is at the moment, I don't see any trade opportunities. Okay, the ones I see opportunities are the ones I've mentioned: US dollar, Japanese yen. Long if you are already long, but I don't see opportunity on long in the market at the moment. And euro dollar, I would be looking to short the market if once there is a little bit of bigger pullback around this area, and then short the market to 1.13. Cool. I think that's it, guys. Hopefully everyone could understand a little bit of what's going on, and everyone could sort of we could sort of see what could come in the coming months and the coming weeks. So I will be back on next Tuesday. If you guys have any questions, bring those questions on Tuesday, and we will definitely work on those ones. All right. Otherwise, have a great weekend ahead. Take care, rest, enjoy your family, and talk back to you on next Tuesday. Thank you so much, guys. Have a great week. Bye-bye.